With that, let's move to our first corporate of the morning. Capital First posted a robust set of second quarter numbers with assets under management growth driving the top line. The profit was impacted a bit by provisions which have risen quarter on quarter, not year on year but quarter on quarter. So all those questions, to answer all those questions, we are joined by Vaidyanathan, Executive Chairman of Capital First. Good morning, Mr. Vaidyanathan. Thank you very much for joining us. Well, growth is damn good at a 42% rise in AUM year on year and almost 10% quarter on quarter. What is the cost at which it is coming? How much more expensive is money this October compared to say June or April?
Compared to June or April, I think incremental borrowing cost has gone up by about 100 basis points. NCDs are distinctly costlier by about 100 basis points. CP are up by about 125 basis points. And bank borrowing is expensive by about 75 basis points.
Can you pass it all?
Well, yes. Depends on product to product. And it depends on competition intensity. But there is one benefit that we enjoy in terms of scale and the operating leverage that offsets a bit of the cost pressures.
How, Mr. Vaidyanathan, good morning. This is Sonia here. How is growth looking? The AUM growth in the quarter gone by was very strong, 40% plus. But what does the second half of the year look like?
Very strong. Across, we are present largely in these three segments. MSME segment constitutes about 56% of our loan book. Consumption constitutes about 33% of our loan, 35% of the loan book, and about 10% or 9% is corporate loans. We see strong growth in the SME and the consumer side. On the corporate loan side, as you know, it's not something that we're growing, but it's pretty flat.
Okay. Can I scratch that point further, Mr. Vaidyanathan? What is your exposure to SME? There are some NBFCs who are not able to lend. So there is a bit of a fear that that sector could throw up stress. Also, what is your exposure to real estate, if any?
Let me answer the second question first, actually. On real estate, we have been consistently bringing down our exposures in the last 6 years at a stretch. Our exposure to real estate is only 480 crores on a loan book of over 32,000 crores. You can see it's become an infinitesimally small percentage of the loan book. And I think, therefore, we do think that if there's any impact in the real estate market because of liquidity constraints, I think we will be entirely unaffected by that.
Okay. How are you battling the liquidity crisis? I mean, you told us about how the borrowing costs have gone up by about 100 to 150 basis points. But, do you have enough money parked in liquid funds and fixed deposits? I mean, I'm just trying to understand with the crisis at its peak, how is a company like yours battling it?
It's not only today, actually. We have maintained this story for the last 8 years at a stretch. Crisis or no crisis, big amount of money in liquid mutual funds and bank deposits. In 2013 crisis, for example, when liquidity went so short, we were one of the very few NBFCs who were buying back our paper from the marketplace, and we were even funding other NBFCs who we thought were good rated companies but had temporary liquidity mismatches. Same story holds now. We have over close to about 2,000 crores in the bank in the form of fixed deposits or liquid mutual funds lying as cash to be drawn any point of time. On top of it, since our portfolio is largely retail, we believe it can be encashed at any point of time. So really, liquidity, zero problem at Capital First. I'm sure about that.
How much CPs are coming for maturing in November and December?
I wouldn't know the number offhand, but it could be about 1,000 or 1,200 crores.
Okay.
It's really small. We keep more than twice. We keep more than twice the money in the bank. So it's
the
okay.
Prevailing mood among the analyst community is that NBFCs will show a strong first half growth, but second half, the best of them will show low growth. The average ones will show no growth, and the bad ones will contract. Where would you put yourself?
First of all, that comment is 100% right. I do think that across the industry could be some slowdown, and there are some NBFCs who have stopped lending at this point of time. Let me say, I wouldn't categorize them as good, bad, worse. It's just about the stage of the rating scale and how much confidence they enjoy in the marketplace. But I think that as far as Capital First is concerned, our growth is absolutely on. You can see the numbers that's coming in. We feel there is a huge demand coming, particularly during the festival season around the corner. There's a big demand coming, and we are entirely liquid. We are open for business, so there is no impact on Capital First.
Okay. Can you tell us a little bit about the merger process with IDFC Bank? What stage is it at, and what about the NCLT approval? When do you expect it to come through?
Yes, all significant approvals are behind us. As you know, NOC from RBI was the biggest one. So was the Competition Commission of India. Of late, the two significant events which went by were the shareholder approval of IDFC Bank. I'm happy to share that 160 crore shares came for polling, and 99.98% voted in favor of the transaction. That's an overwhelming mandate. Capital First shareholders also voted for the proposal. And of the 7 crore shares that came for voting, 99.9% voted in favor. So really, I think it's an overwhelming mandate by any standards. Now from here on, we go to the NCLT with a petition to formally allow us to merge the companies. I think it's merely procedural now. And once that comes through, we will go back to RBI for a formal approval, which again we believe should be largely procedural. So you can take it from it's largely done.
Okay. Congratulations for that. Mr. Vaidyanathan, your provisions are at 209 crore. That is about 35% higher than the 150 crore, I think, provisions in the first quarter. Why that? That's a big jump.
I don't know which benchmark are you comparing against Ind AS or IFR or Indian GAAP, but broadly quarter on quarter, like to like in the accounting policy, we are broadly flat. Maybe we're close to about maybe 20 odd crores. I think that in terms of asset quality, as you might have seen from the numbers that we've posted for the last many years, and indeed this quarter, I can just say to your viewers and to you there is absolutely no problem. I told you, since there is no one-time black swanish event in the book, it's largely diversified over 7 million customers. It's it's largely statistical, and there is absolutely no adverse movement in the credit quality at all.
Okay, you mean like to like, it's the number was 20 crore. Okay, we have
yeah, it's somewhere 20 or 25 crores, somewhere in the zone. But yeah, but thing is that it depends on, like I said, the accounting standards have changed, because last year we were in Indian GAAP, this year in IFRS, so you might have seen some changes there.
Okay, but on asset quality itself, you have seen a minor deterioration overall in your gross NPA ratios. Do you expect that to continue?
Again, I must just qualify that for all NBFCs, they will suffer with this confusion this whole of this year, because we're comparing last year's Indian GAAP with this year's IFRS. But let me just clarify.
Quarter on quarter. Quarter on quarter, it's gone up. No?
The gross NPA until. I'm coming to that. Yes, indeed, it's 1.94%. I'll just clarify that to you. So our number this year, gross NPA is 1.94%. Last quarter was something like about 1.75%. So quarter on quarter on a gross NPA basis has gone up by about 20 basis points. Net NPA has gone up by about 20 basis points. We feel that it's procedural, like I told you. It's a statistical number that coming across a pool of flows, and I don't see a fundamental deterioration whatsoever.
Okay. One final question from my end then. You said that there could be a slight slowdown in terms of overall NBFC growth, and you also mentioned how, although you're doing well in SME and consumer, the corporate book is not growing as much. How much do you think the slowdown in growth could be in the second half of the year?
Well, I can, are you meaning for Capital First or for the industry?
For both. I mean, if it's an industry-led slowdown, then I'm sure you're going to be, seeing some pressure as well.
Okay, let me just, like I said, let me put it up for the industry. I have definitely heard that across the industry there is a slowdown in incremental lending, because there is some uncertainty on the borrowing side. As far as Capital First is concerned, we have always guided for about a 25% growth. I think this number, this quarter, is a little higher than that. I think very comfortably we can grow at 25% plus. In any case, as far as Capital First is concerned, now merges around the corner. Maybe a month and a half, two from now, we are on a banking platform. So I see absolutely no reason for slowdown. slowdown. A small note on the NBFC front, since we raised the subject on the industry. Let me just say that there is a very important point here on this cycle, that the asset side of most NBFCs have no problem, or at least have limited problem, if at all. So it's a question of how the liability side plays out and how they get the cash flow for that. There, I think the NHB has announced that they're going to take the number up from 25,000 crores to 30,000 crores for refinance. The RBI has given some relaxation from 10 to 15%. SBI has announced that they're going to put out 45,000 crores of buyouts. I think the announcement happened maybe a month ago. It takes time to actually conclude the transactions. My belief is when these cash flows start coming in, I think the money will start flowing a little more freely. As of now, there is a concern, but as all of us know, when these measures take shape, that things will ease.
Right. Good to hear that. Thank you very much, Mr. Vaidyanathan, for joining us with details of your numbers and your perspective on the debt market and the NBFC sector as well. We're going to carry that conversation. For other companies, there was also the Kerala floods issue.